Ba-dum-ba-bum. It's about to kick off. Just give me a half second. Says it's being streamed live. And there we go. So thank you guys so much for joining. So we're gonna go over the life of a loan today from beginning to end. What happens when you meet somebody? What do you do? How do you proceed? What does the pre-approval process look like? Then what does it look like once you find the house and get into contract? And from beginning to end, what are we expecting? So let's kick it off. I'm gonna share my screen with you guys. Let me know if you can see everything up there.
Yep.
Yeah, perfect. All right, y'all. So here we go. From pre-approval process to funding and recording.
So here's what
This is the old method, you guys. Can you hear that?
Some version of the package maybe pulls credit.
Kinda.
Pre-approval letter. Really what's happening there is that loan officer is giving you a pre-approval based on their best guess. But the truth is they're not an underwriter. So at least 10-20% of the time, there's an honest mistake that doesn't get a debit.
So if you can't hear it, I'll talk to you through it.
Until much later in the process.
You definitely hear it better.
Out for 3 weeks, 3 months, 3 years, however long it takes, looking for a house for the client based on the loan officer's best guess. And finally, once they get into escrow, the lender starts to do their job, springs into action, and starts doing all the heavy lifting. They order the 4506T to make sure the IRS transcripts come in, to make sure the tax returns are legitimate. They finally verify the down payment. They dig into the bank statements. They make sure the wife's not on maternity leave. They make sure the husband's not on disability. The lender, in the old school model, does all of the stuff that burns time. And now, 10 to 17, sometimes 20 days of the process, the underwriter, the person that actually has the authority to approve the loan, finally looks at the loan. What they find? They find the mistakes based on the loan officer's best guess. Anytime realtors have heard the excuses, well, the guidelines changed. Or, yeah, we missed this. You got to put down more money. Or, let's try another lender and shop this over to another bank. All that really means is the good intentioned loan officer made a mistake that's now been caught by the underwriter. Now you have anywhere from 10 days to 2 weeks to 2 months where everything has to be restructured and reworked because of the fact that the loan officer made an honest mistake and you do not have a referable experience at the end of the transaction because the client is frustrated. The client did not get served. Fast forward to Movement Mortgage, founded in 2008, completely re-engineered the process and wanted to do things differently. What we do, we still do our pre-approval. We want to be engaged with the client and tell the client and the realtor, hey, more or less, you are approved up to $500,000 with 10% down. However, why stop there? In our system, we want to send the file directly to underwriting today. And what that means with Movement Mortgage's process is we will get the underwriting back, usually in 6 hours or less. And before the realtor even potentially meets with the client to start talking about neighborhoods or much less driving them around to look at houses, we're going to have a fully underwritten loan. And I love it because we don't stop there. Our processors are amazing. They go to work and they have what's called a 7-day process. And they are bonus based on how quickly they can process a file. If they close the file out in 5 days, great, they get double their bonus. If they close the file out in 7 days, they get their bonus. And if they miss a closing date, they start to lose bonus on that file and potentially other files. So our processors are highly motivated to get the job done. So now what do you have? You have a file that's been fully underwritten. You have a file that's been fully processed. And before the realtor even starts to make offers for the client, we have a completely approved loan signed, sealed, and delivered. It's a better system. It's a better way to service our client because everything that is normally done in the old school process has been done upfront.
We're doing it first and foremost. Like there is no reason whatsoever that we should be waiting for you guys to get into escrow for an underwriter to review your loan. In all reality, most of these loans that come through us that are pretty easy, we don't need an underwriter. If someone has a salary job and very little debt and this is their first home and they've been on the job for a while, like there's really little that an underwriter can do that is any different than what we're going to review. Like we'll get the verification of employment, we'll get the tax transcripts, we'll pull all the necessary documentation up front. But we really, I mean, for something that cookie cutter, we don't need somebody else's opinion. However, if you have someone that's self-employed with like, 4 or 5 different houses that's been writing off everything under the sun on their taxes, that's when we want, you have a variable income employee, right? That's really when we want a second set of eyes to make sure that we're calculating that income correctly. Because look at the end of the day, right? That income is what drives the entire mortgage equation. So if you have your debt to income levels, right, is going to be what determines your maximum purchasing power. Think about it. Like if you screw up that income denominator, your whole ratio is off. If you inflated that income, you're all of a sudden approving them for a much higher number. That's where those mistakes lie. That's where all of a sudden you hear, oh, we're not approved, or we need more money for a down payment. Like that's the issues that come up during escrow that we avoid up front. So if we ever have a second, like a question on anything, we're always submitting for an underwriter, no matter what. And it may take a little bit longer, but look, at the end of the day, we don't have loans that fall out of escrow because of us. Like that's the name of the game, right? We want to make sure that that thing is buttoned up for you guys and that they're so comfortable with their monthly payments and their out-of-pocket expenses that they're out like going out looking for a rental, right? That's how comfortable I want our clients, because after they get pre-approved, we sit down with them. Matt and I will go through what's called a mortgage cost analysis. And we've already presented this in a different class for you guys just to show you what that report looks like. But it really gives them a thorough breakdown of like 4 different loan scenarios. We'll show them what the maximum purchasing power is, and then we'll show them really what their comfort level it should be, what they tell us it should be, right? And we back into that price range where they should be shopping to keep it comfortable based off of how much money they have up front for the down payment and how much they're comfortable with paying every month, right? So we'll give them that price range. You guys will go out shopping, and you'll have the flexibility to be able to reach back out to us if we need to make any kind of adjustments down the road. But that's where we differentiate ourselves. We do that thorough underwrite up front. And so, like to start, it's really not a lot of paperwork. Think about it, right? You need maybe some pay stubs, some W-2s, and bank statements. If you own a home, we do need the information on that home. And depending on, and then obviously your ID, right? We need to verify you are who you say you are. But at the end of the day, it depends on your job. Is going to determine what kind of documents that we're going to need. So every single job, y'all, has different income, is paid differently, and we need to document that accordingly, and we need to calculate that income. So critical, right? Because the underwriter is going to review your 3 C's: your credit, your collateral, and your capacity to pay back that loan. So your credit's easy, right? When you fill out the application, ding, 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 we pull your credit. Great. So that just gives us a credit score, just a hurdle that we need to overcome, but it also gives us your monthly debts. And remember, that's going to drive your debt to income level. That's capacity to pay back the loan. That's the second C. And really the third C is just your assets. It's your collateral. Like where is that money coming from for the down payment for the closing costs, right? So we need to evaluate those 3 C's. And so it depends on the type of job. Like if you're commissioned, we would need to average out your income over the past couple years. If you have a second job, we need to verify that you can hold 2 jobs for an extended period of time. If you receive child support and alimony, we have to make sure that we document that you've been receiving it for the past 6 months, right? Trust income, like there's all sorts of different rules and regulations, guidelines per se, right, that pertain to mortgage lending that we have to follow in documenting this income. And we're going to do it up front and make sure that we get it all dialed in so that you guys don't have any kind of questions. Because imagine you trying to get your hands on a trust, on a family trust, and nobody wants to release it to you. And then you get a pre-approval from Pocket Mortgage, right? And you're out there shopping and the borrower can't get a hold of their trust because the family won't release it. Well, guess what? That income just disappeared because you don't have access to that documentation. That's the kind of stuff that pops up in the middle of escrow we want to avoid. So we're going to do our due diligence up front. We're going to get them pre-approved. We're not just going to pre-qualify them. Look, at the end of the day, right, we have what's called a pre-qualification letter. We put them through an automated underwriting system. Every single loan officer, every single bank puts them through some sort of automated underwriting system where it spits back all the guidelines and all the rules that we need to follow and all the documents that we need to close this loan. Okay. Depending on the types of job and the information that we put into that application. So if we put shit in, we're going to get shit out, you guys. I can manipulate a loan any which way to Sunday to make that person get pre-qualified, right? And that's all that we do. We talk on the phone. They give me their information. I put it into the application. Great. I got an application. And didn't run credit. Imagine me going out there and lending $500,000, $1 million to somebody and not running their credit. Like, people ask for soft pulls. Okay, great. We can scratch the surface, or do you want an actual approval? Do you want us to like tell you that we can lend you the money, or that we can tell you that, hey, this is about what the payments are going to look like if you have this money? Like, it really depends. We'll do both ways, but the more thorough pre-approval letter is what we're looking for. We want to have our clients go through the process and understand that there are going to be documents that we're going to need, and we want to get them approved, dialed in. You guys are off and ready to go shopping. So we're done, right? We've gone through all the numbers. These clients have everything dialed in. They know exactly what they're looking for a house with you guys, for a condo, what have you, a townhouse. They know all their numbers. They're comfortable with them. They're out there shopping. Now you guys are out there looking for places, getting in touch with us. Our new software is pretty badass. It allows you to go in and get your own pre-approval letters after we've put a maximum limit on there. And we'll go over how to do that on a different class and show you how to use the portal. But just so you know, you're able to get your own approval letters now whenever you need them, which is pretty awesome. So we get them pre-approved. You guys are out there shopping. Now you make some offers out there. You finally get one accepted. You've negotiated the contract. You've gone back and forth. The most important thing y'all got to do is make sure that you contact me when you start making those offers. And the reason being is because your loan officer and the real estate agent, we're a team, right? We got to go at this as a team. I need to pick up the phone and I need to call that listing agent, and I need to make sure that they understand that we are working together as a cohesive group. We're constantly in communication with the buyers, with each other, and that we know exactly how this file is dialed in. And we also need to make sure that we're going over all of the little nuances to this loan, because you do have contingency periods that you need to make, right? And how are you going to guess? You can't just guess on a contingency period, right? So you're going to call the loan officer and we're going to have a discussion. And if we really need to speed things up, we can close a loan in 8 days, like from beginning to end on a conventional loan. A VA loan, maybe 2 weeks, FHA loan, about the same, 2 to 3 weeks. So at the end of the day, we can go really fast. We can move really fast. Get it? See what I did there? But we want to make sure that all of these parameters are dialed into their contract. Okay, your purchase contract, all the counter offers. So when you get into escrow and you have someone accept your offer, you need to send us all this information, right? We need to open up escrow as quickly as possible, especially if we're doing something super quick, right? We're having a conversation up front and we're making sure that we are completely dialed in and in tune, and we have the buyers on schedule with us, because as soon as I ask them for something, they have a couple of hours to get it back. If we're going 8 days, like, we got to be Johnny on the spot in order to get these documents in and close that quickly, right? We can't be waiting a day or two for people to get back to us. So we have to be on board in our communication with that buyer. But you're going to send us all of this information. Who's the escrow officer? Who's title? HOA. Hopefully you have a transaction coordinator. You're using one of the ones that we work with religiously, that know the business inside and out, and they're going to put together an email with all the dates and all the players onto that intro email and include us, and that way we have everything that we need. So we open up escrow, right? You got to send us all the executed addendums as well as everything that you marked off right here, right on page 2. So we need to get a hold of all of these little check. These are all part of the contract, so please make sure that they're included when you do send them over to us, okay? We need all these advisories as well. So addendums are up here and advisories are down here. And then anything else that's incorporated into that RPA. We just need a copy of it. All right. But most importantly, we need your signatures, you guys. we don't have an executed contract unless everybody signs it. So a lot of times, like agents will send me like, "Hey, here, the buyer signed the contract. Here you go." Well, guess what? That's really just a piece of paper with an electronic signature. Doesn't do us any good because nobody executed it with multiple signatures. So the buyers, the sellers, and both agents need to make sure you sign that contract, please. Thank you. You wouldn't believe how many times we have to go back and ask for it. So we've gotten the contract. Next thing you know, we need to get an earnest money deposit, right? So usually that's within 3 business days. That's how it goes, at least defaulted to on the contract. 3 business days, they have to send their earnest money. Please, please, please do not ever handle their money. Don't take their check. Don't pick up their check. Don't drop off their check. Don't forward them wiring instructions. Don't get involved in their money whatsoever, except for the fact that tell them like, hey, if you're going to move around money, make sure you talk to your lender, because we want to make sure that the money that's coming from the earnest money deposit isn't coming from like XYZ bank overseas, or mom and dad, or like some other account that they never provided to us. So we need to make sure that we have all the documents for all the bank statements that they're for the accounts that they're going to be using. Okay. We need to see this money come out of their account. We need to see it go into escrow. It's very, very important that you guys don't get involved with that. Let us do it. It's also very important, especially with all this wire fraud, that our clients call escrow and verify those wiring instructions that they receive from escrow directly. Because at the end of the day, once they click that wire and that goes out, they can't get that back. And if someone unscrupulously broke into someone's email account and saw that they were getting into escrow, it's a very high probability that they could wind up sending them a separate email that looks kind of like yours or escrows or even mine, and give them different wiring instructions, and people might fall for it and send them money and goodbye money. So we don't want that to happen. All right. Um, so next step, they send the earnest money within 3 business days. Okay, a bank has to send out the initial estimates. Okay, they're called. This is the loan estimate document. You'll see coming up will be the closing disclosure. It's going to look very similar to this. But the loan estimate is just that. Look at, we have 3 business days to send these out. A lot of times, these escrow companies, they don't have time to collect and send us all the fees, especially if we're moving on like an 8-day close, before we need to get these out, because I can't order an appraisal until we have a signed intent to proceed from the client, which is a document that's inside of these initial loan disclosures. These loan estimates are just that. They're just estimates. They literally mean nothing. They have the purchase price that they're buying, an approximate interest rate that they're receiving. Yeah, I probably need to update this. 2.875 doesn't exist anymore. So I
You mean
know.
I could get a
I
two point
saw
eight
I
seven
saw you.
five on a $700,000 loan and only pay 2,100 bucks? I'm in.
Yes, those days are gone. So getting back to business, I knew Matt was going to pop in. I forgot I haven't updated this thing yet with the 2.875. So, um, you're going to get these loan disclosures. Honestly, it's just an estimate. That's why they're called loan estimates. They're going to change. The closing disclosure is going to be a lot more dialed in with their numbers, but at least they have some sort of figures that they can work off of and say, hey, approximately this is what it's going to cost. Usually my mortgage coach breakdown, it's going to be even closer than this. But these are estimates. We have to put something out there for them to sign, and this is what we're giving them. Okay. It just goes into loan amount, what the rate is, what your monthly principal and interest rates are, principal and interest payments are, approximately how much taxes and insurance might cost. This is a big confusion that a lot of agents, a lot of clients will see. And like a lot of times I'll pick up the phone and make sure if they do have an HOA, that's the difference here between what the estimated escrow is and then what this number is. Some people will call me up and they're like, wait a second, you said it was going to be $4,000 and now there's another $1,145. No, 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 no. Like this number is already included in here. I don't know why they did it like this, but if you see that HOAs are not included in this number, it's just because it's right here. So it is what it is. I always explain it to my clients and make sure that they're aware of it. and go over all these numbers. Their total closing costs are right here, and their total cash to close, you guys. So remember, cash to close in our industry means that's the number that you're going to have to wire, okay, to close the transaction. That includes your down payment and your closing costs. So that's what cash to close means. You'll hear us use it a lot. And so I wanted to make sure that you understand what that means. So on the second page of that loan estimate is really a breakdown of the fees in different sections. And again, I will go over these with clients and explain to them these are just estimates. They mean nothing. They're going to change. If you see anything in error, please let us know and we'll get it dialed in for you. And then your initial disclosures, they'll tell you that, you know, this can or cannot be assumed. There are no prepayment penalties. There's all sorts of legal disclaimers on this third page. But again, these are just initial estimates. We send them out, bunch of legal mumbo jumbo that they have to sign, that they want to proceed with the loan, what have you, and all these FBI warnings and you name it. We're in California. There's probably like 30 pages they got to electronically sign, but then they get through it and we're off to the races. So at that point, once we have this, we're ordering that appraisal, right? As quickly as possible, we're getting that appraisal. And we need to get them to sign these loan estimates, that intent to proceed, okay? And then we actually will now send them a separate link that they can log in and just pay for their appraisal right online. It's very, very simple. They can do it off of their phone. It's usually the easiest way for us to kind of keep the process going. And so I will communicate every step of the way. Hey, your initial disclosures are out. Oh, thank you. We received them. Please make sure that you expect, you know, another email from us to pay for the appraisal. Hey, the appraisal got ordered. We have a systematic way of communicating with all of our clients every step of the way so that they know not only of what's going on now, but what the next steps are. Because it's really important to keep everybody in the loop. These emails go out to everybody in the transaction where they get separate emails, our buyers, our listing agents, and escrow and title. So everybody's on the same page. It really makes for a much, much smoother transaction that way. So once we get the appraisal ordered and it comes back, obviously the most important number that we're looking for is, hey, what's the value of the appraisal, right? But you also want to make sure that the information that was on the contract, that the appraiser has entered it correctly. Because, you know, life happens and typos happen. And sometimes I've seen, you know, the wrong purchase price go in there because they didn't get an addendum when they were supposed to, like a counter offer that we didn't send them because we never got it. So anyways, stuff happens, okay, and we can always get it fixed. But I just want to make sure that this very top section y'all take a look at, that's what's in the contract, okay? And then down the bottom of that first page, you'll see where it actually it's right down here. It's gonna tell you is it as is or is it as if? So as is great. Like we want an as is appraisal. Like that house is fine, the as is, right? If we have an as if box checked on there, that means that there are repairs that are going to be needed that the appraiser is calling out. And you know, this huge stigma about VA loans. Look, at the end of the day, VA loans, FHA loans, they're fantastic loans. They're insured and guaranteed by the government. They've got lower interest rates. You know, FHA allows for credit challenged individuals to buy homes. VA allows for, you know, our veteran community out there to be able to purchase a home with no down payment. I mean, the benefits go on and on. But at the end of the day, they want to protect their buyers. So they're going to make sure that those homes don't have health and safety issues. Okay, so that's really the only discrepancy between a conventional appraisal and an FHA or a VA or a USDA appraisal is that the health and safety issues. So if you have a fence that's leaning, okay, or if you have like a wobbly railing walking up into the house and you have some steps, or you have some broken cobblestones, what have you, if you have like a cobblestone, you know, pathway, they want to make sure that you can't trip and fall and like hurt yourself. Exposed wiring, like holes in the wall with wires sticking out, right? Like that's the things that they're looking out for. They're not looking out for like, hey, like, you know, the kitchen isn't like as up to date as it could be, right? They don't care about that. The carpets are dirty. Like they don't care about that kind of stuff. They care about true health and safety issues, right? So understanding the appraisal is really important. Right down here on the next page, you're going to see more information on the appraisal that it's coming through and it's been maintained. It will tell you if there's any kind of HOA issues that are up here. They really go into depth and tell you like what the conditions of the property is compared to other properties. And then lastly, on the third page, or right where you see all of the comps listed out, that's where you're going to find the appraised value. So I always skip to that first whenever I'm looking at these reports. And then from there, I usually wind up doing a control F and searching for the word repair to see if repairs are being called out in the report anywhere. And if they're not, great. But at the end of the day, an appraiser underwriter is going to have to review this anyways, and they're going to let us know, and we're going to communicate that with you guys right up front. But I will take a sneak peek at the value and let you guys know if it came in at value. So after we've ordered the appraisal, usually before 99.9% of the time before we get the appraisal back, we've already have an underwriter that's reviewed the entire file and given us an approval. And look, it's called a conditional approval because there's usually we don't have everything that we need for a final approval until we get that appraisal back. And there's usually a couple of documents here and there that might need to be updated. They need homeowners insurance. Usually it's very minimal, 2 or 3 items that we'll need from a client because we do our due diligence up front. So we're collecting this information up front. But our underwriters, within 6 hours of triggering that live application and putting in an address, once you guys give us that contract, they're reviewing that file and they're giving us a full loan approval. Okay. And they're going to tell us, they're going to come back and say, hey, you need homeowners insurance, or you need, letters of explanations for this or that. We've already ordered the tax transcripts, but there might be a secondary financing. So we might be doing a first and a second loan. There could be mortgage insurance. We might need to update the verification of employment. Like there's all sorts of termite clearance, right? On a VA loan. Like we have all sorts of other things that might pop up, and they're going to give us a list, and we're going to reach out to the client within 24 hours and let them know, hey, these are the things that the underwriter said that we need for a final loan approval. Clear cut. And that usually happens within 2 to 3 business days at the most. If we're taking our time, right? If we have something speedy fast, it usually happens the next day. So once we open up that escrow, so it's really, really quick. Once we get our approval, our processor is going to pick it up at that point, right? And they're going to reach out to the borrower and ask for these documents. Now, mind you, most other banks do it backwards. That's the big difference with movement. So you will have a processor go out there and they'll give them a list of what they think that they're going to need for this final loan approval. They're not the underwriter. They're not going to give them a loan approval. They're going to say, hey, I think we're missing this, this, and this, and this. They're going to ask the borrower for that, which we've already done. Then they're going to process the loan. They're going to wait until the borrower gets them all these documents back. Then they're going to submit it to an underwriter. Then the underwriter is going to wind up looking at it for a couple of days. Then the underwriter is going to get back to the processor. Then the processor is then going to have to re-review everything and ask for all these documents again. And then they're going to go back to the underwriter again. So it's such a convoluted method of doing it. These other banks got it backwards, and they're still doing it backwards. It's unbelievable after all these years. We do it right. We underwrite first, we process second. We don't process and then underwrite. The cart does not go before the horse, okay, you guys? So that's the difference in movement. That's how we're moving in 8, 10, 14 days and closing loans, no problem, is because we do things the right way. So once we get the conditional loan approval, our processor has reached out. We've locked in our loan. We're now in pre-closing. And what does pre-closing mean? It's a person that works for our bank that actually works on your closing disclosure. And the closing disclosure, hey, remember I told you guys that that loan estimate is going to look just like the CD? Closing disclosure? That's exactly what I was meaning. Like, look at this. It looks exactly like it, right? The only difference is closing disclosure up here. And down here, it's going to tell you if your rate is locked or not, okay? And you'll get much more detailed information on exactly what rate you're getting, what rate's been locked, what your monthly payments are for sure. And now your closing costs are all dialed in because we've been able to reach out to title and escrow, get all those fees, and now we're disclosing. So now you do get 3 closing disclosures, just so you know, during escrow. This is the initial closing disclosure. You have to sign this initial closing disclosure in order to eliminate the 3-day mandatory federal waiting period that you have to go through before you can sign loan documents. So we do things differently. Again, like other banks do, right? Most banks will wait till they have that final loan approval and then they're gonna send out the CD. The initial CD doesn't need to wait. I send out the initial CD as soon as I lock in that rate and as soon as I order that appraisal, because that is going to eliminate that 3-day waiting period. That's how I can close a loan in 8 days. I can't wait for a week, for 5 days, 6 days, whatever it is, 10 days for an underwriter to get through a loan approval. Like, it doesn't make sense. You don't need to do that. There's no reason. But these other banks have these rules in place. So look at the end of the day, we're putting this CD out ASAP. We're getting those signatures because not only are they going to get this one, but then the final CD is going to come. Once we get a final loan approval, everything is completely dialed in. The closer picks up the file and they've balanced everything out with escrow, right? And that CD, the final CD, that's the last thing that gets dialed in to the penny. And we need a closing date because remember, that's a moving target too. Sure, you might have agreed on, hey, we're going to close in 2 weeks, but now we finished in a week. And then you're like, oh, well, yeah, let's close early. So now we have to move that day. So guess what? All their prorated fees get changed, all their prorated taxes and insurance and interest, right? Everything changes along the way. So we don't have a choice. We have to make sure that this final CD is the last thing that gets dialed in. But wait, there's more. After this final CD is signed and everything is recorded, there's a post-consummation CD, right? So that's the third CD. After they close and they say it takes them like an extra day or so to like the wires out or they they didn't have as many fees as they thought that they were going to have, a title or escrow fees, whatever, or something got waived or something, after we closed, they're going to send out another CD with a refund check usually because they pad their escrow will always pad the numbers a little bit. And so that they always have enough money to make sure that they close. And I'm talking about a couple $100. But then they'll send them a post consummation CD along with a refund check for their escrow. I know I'm going fast. I haven't seen any questions pop up. I got the chat open, so I'm just going to keep going. Closing disclosures, right? We've signed the closing disclosures. At this point, I am having a conversation with our borrowers to make sure that they understand line by line what are the points? What is a processing fee? What is an underwriting fee? What is the appraisal, credit fee, tax service fee? Like, what are all these? Who is charging me all of this? What is this? How much is that? All right. I want to make sure that they're totally dialed in and they know exactly what their numbers are. At the end of the day, I need them to know what their closing costs are going to look like and how much they're going to be paying and how much the down payment is and what that cash to close number looks like, because that to me is most important. I want them to be super comfortable with their numbers. And then with the CD, it also shows you on page 3 so it takes it and breaks it down on page 2 and then it summarizes it on page 3 and it'll show you what the loan estimate was versus what your final was, and then it'll show you like a thorough breakdown line by line over here of what your borrower's transaction looked like. So what the purchase price was versus all the closing costs and any kind of additional prorated taxes they have. So any kind of money that they owe versus money that they have coming at them with the loan amount and with the deposit. And then at the very bottom, it nets it out. And that's where they get the cash to close. Pretty simple, right? I go through all this. I want to make sure that our clients, when they're signing their loan documents, they don't have any questions about their numbers. None. Zero, zilch. Like, they're totally comfortable with everything. They don't have any questions. We've answered in advance and we're good to go. So one thing that I always make sure that they understand is about their taxes. Okay. There are impounds on most of our loans. They have to be waived in advance. If you put 20% or more down on a loan, on a conventional or a jumbo, you can waive your impound account. What's an impound account, right? You might hear impound account, escrow account, attorney account used interchangeably. Basically what it is 1/12 of your annual taxes and 1/12 of your annual insurance is being collected up front, okay, on a month-to-month level basis, excuse me. Every time you make that payment, 1/12 of your taxes, 1/12 of your insurance. It's being put into an account, and then it is being paid for on your behalf. So there, when your insurance comes due in a year from now, right? We're going to have money in that impound account to pay for your annual insurance policy. When your taxes come due a couple of times a year, if it's biannually, semi-annually, excuse me, or if it's quarterly, the money is in that account so that those checks can go out every time that they're due, right? And so here in San Diego, at least, our property taxes are a little bit wonky because look at they're due in November and they're late in December. And then they're due again in February, but they're late in April. So April 10th, by the way, if you guys are thinking about it, it's coming up and it's April, believe that. And we need to make sure that we pay our taxes if you own a home. So don't forget. That's your public service announcement for the day. So look at depending on what month you close in will determine how much needs to be collected into. It's a very wonky schedule, but we do have a schedule for it. It makes sense to the tax assessor's office. It doesn't make sense to me. But it is what it is, and we follow the schedule and we can collect those taxes up front. There is something called a supplemental tax bill, you guys. And this is something that every borrower is going to receive, every buyer is going to receive, right? Basically, we pay the property taxes that are due every year. However, when a property exchanges hands, there's a difference between what the previous owner was paying for in their taxes and what the current owner is going to be paying for. There's going to be that difference based on a prorated amount of time that they own it before they get their new tax bill, right? And so the county has up to 12 months to reassess their property. So imagine if someone's paying taxes on a $300,000 home and now they sold it for $1 million, right? And they bought it somewhere like right now, okay? You're going to have a prorated amount from now until the end of their fiscal year in July 1st that you're going to owe that money. But that money is going to be a lot different because you're actually paying the taxes based off of somebody else's tax rate when you close on the loan. And we're going to be collecting going forward off of your tax rate. There's going to be a difference. It's going to be prorated and they're going to bill you for it. That is not part of this impound account. That's going to have to be paid off in cash. The clients need to know about it. Make sure you mention it to them. Hey, there are things called supplemental taxes. Your property gets reassessed in value. Your taxes are based off of the value of your home, and the difference between the value of your home, of what you bought it for and what was sold, is you're going to owe a little bit extra in property tax. Just be ready for it. It's going to be a bill. It's a one-time bill. It happens to everybody that buys a home. It's part of life. Death and taxes, right? So hopefully that explains the impound account and how we collect it, and what it's all about, and supplemental taxes. Cool. Awesome. Moving right along. So your closing disclosures, you guys remember I told you had a 3-day waiting period. This is kind of a little 3-day waiting period cheat sheet that we have, just so we know if we sign our CD on a Monday, we can sign loan docs on a Thursday. Okay. And this right here will tell you exactly how and when we're allowed to sign. Now, Sundays don't count for counting business days. So it's Monday through Saturday. And holidays don't count either. Guess what? Cesar Chavez Day today doesn't count. So yeah, so there's that. Moving right along, we need to get those 3-day waiting periods out of the way with. We're not waiting until the final loan approval like all these other banks. We're not delaying the closing process because we didn't put out a CD. We put it out right from the get-go. And then we submit for a final loan approval. That's when the underwriter reviews everything that we receive, the appraisal, the condo docs, if it's a condo. They're going to make sure that all of our income and asset documentation is okay. They're going to just double check the entire file from beginning to end. And from that point, they're going to give us a final loan approval, and we're all going to celebrate with a hallelujah. We got to clear to close. If you hear me say clear to close, you are psyched. We are done with the loan. The next thing that's going to happen is our closing team's going to pick up that loan, and they're going to start getting in touch with escrow. They're going to ask for all their fees once again, any kind of prorations, any kind of additional fees that may have incurred during the course of escrow. Any, termite could have happened. They could have had additional inspections. It could have been seller concessions. There could have been all sorts of different numbers moving around. So they're going to dial in the vesting on the house. Vesting is how do they want to hold title? Do they want to hold it as a single person, as a married, tenants in common, right? That's not anything that we can, you or I, as a real estate agent or myself as a loan officer can give them advice on. It's a legal matter. So we can provide them with like a vesting schedule and show them exactly what it looks like, all the different ways to hold title. They're going to have to make up that decision on their own. They'll communicate that with escrow. Escrow will let us know. We'll document it properly so that their name on the title and how they're going to hold title is correct. We'll get all those loan documents over into escrow, and then we table fund our loans, you guys. And what does that mean? We don't need to wait for your loan documents to come back, all signed, sealed, delivered, before we give them the money to close escrow. So we are, as soon as we send those loan documents off and they have an approval to sign those loan docs, we can send them the money that same day. So we can sign, fund, and record in the same day. A lot of other banks, they're going to ask for those docs back. Then they need their doc department to review everything, check all the I's, check all the T's, make sure everything's dialed in. We don't. We're going to assume that the escrow company knows how to do their job, and we're going to hand off the paperwork. We're going to send them the money, and then hand the football off to them to take it across that finish line, right? So that's what our closing team does. They do that rapidly. So remember, 6 hours underwriting, 7 days to process that loan from beginning to end, right? And then 1 day to close. So that's our 671 process. It's lightning fast. That's how we're closing loans in 8 days. There's no hiccups. You have signing, funding, recording could happen in the same day, not a problem. And most important, someone's getting their keys, and that's all because of you guys. So hopefully you guys have a much better understanding about the movement process, about the loan process from beginning to end. How is that? Questions?
That was great, Eddie.
My mouth is so dry, it's crazy. Hopefully I made you guys laugh too. Hey, y'all. If you guys don't have any questions, it means I did a really good job in explaining everything, and I'm really psyched that you guys are here. So thank you so much for spending your Monday morning with me. Let's go get some of these escrows. Let's go. Let's go. Let's go. What are we waiting
Let's
for?
do it.
I'm not scared. I am here for you guys no matter what. You have any questions, the easiest way is just to get in touch with us. Call Matt, call myself. We're here for you guys nights, days, weekends, like all the time. Whenever you need us. So we're working as a team. We got your back. Whatever we can do to help, give us a shout.
Thank you, Eddie.
Thank you guys so much. You bet, you guys. Thank you so much for coming. I'll talk to you soon. Have a great day.
All right, you too. Bye.